Hi everyone, Zev Fema here, research analyst with Jim Cramer's Action Alerts Plus.
Great that you're here, Zev.
Yeah,
Welcome
live
to
from the floor of the exchange. Thank you. Great to be here.
Thank you.
Jim, let's just dive right into it.
Sure.
So this morning, last night, Trump announced the tariffs. China actually hit back a few minutes ago, 60 billion. You wrote in Real Money, though, this morning. We have more leverage than people think.
Yeah, I mean, Zev, I think that there's this whole notion that because President Xi is president for life, that therefore the Chinese economy doesn't matter, that he can take any amount of pain. I think what Xi doesn't realize is that our president doesn't care about the pain of our companies.
Right.
That he's looking at employment, he's looking at inflation, he's looking at the stock market, and he's saying, wow, you know what? We can take the pain. Xi can't. He's looking at their stock market. Xi needs employment. It has never been in China about elections because the elections are phony. It has been about revolution. It has been about the possibility that employment could go down. In the old days, that used to be about putting people in the army. And there's great books about how Mao put the 8th Army to work to build bridges, the 8th Army to do infrastructure. Those days are past. So all I'm saying is that you got to be careful if you're betting against China. They're slowing, and one of the reasons why our stock market's doing better today is there's word that the Chinese are putting stimulus through. So at the same time that they're raising 60 billion, which is not that much because our companies that have not been thoughtful, like Five Below has said, listen, we're going to move out of China if we have to. There's a lot of companies in retail that can move out. So all I'm saying is that don't think that the U.S. has no leverage. If they say, look, we're taking 10 and we'll go to 25 by January, I think that's a real good incentive, even though it's a loss of face to the Chinese. It's a good incentive. Good incentive that maybe they deal. They can deal.
And you commented that Trump is all about sort of the short-term pain for the long-term game.
Yes.
I mean, we've got all this money flowing around from tax reform, so now is the time to do it, right? Our market's high. Theirs is about, 20%
now is the time. And I think that people have to understand this is a long-held belief by Trump. Not that Trump can be president for life, but that if you are buying $500 billion, of which probably I would estimate that $400 billion is completely discretionary. I would say $100 billion is really important in terms of, say, technology. That's probably high. But if you're will Dollar Tree be hurt? Because, yes, they'll absorb some of the pain. But I think that people don't recognize that this is about moving factories and not building new factories in China. The Chinese don't want that. They want those factories. It's really about American companies. Historically, American companies have been able to pressure the president and Congress to keep the Chinese market open for their own earnings per share. What I'm saying is Trump does not care about our own earnings per share. It's the first president that doesn't. Obama cared tremendously about American companies doing well in China. Trump doesn't. And you better get it through your heads that he doesn't. And by the way, I think obviously the industrial stocks acting so well are indicating that the Chinese will come to the table.
Right, and that's something we were talking about yesterday. I mean, we own 3M for the trust Honeywell, and we were pretty amazed at the resiliency.
Right, they held up because there's a belief that even if the Chinese don't come to the table, they won't hurt those companies because, as Darius Adamczyk said, the CEO of Honeywell, they have money. What they make there, they keep there. So I think that we have to be less pessimistic, is what I'm saying. Let's not be, because the market's telling us to be less pessimistic, and I don't want to have our viewers and our readers miss the opportunities. That's really where I'm coming from. I'm not saying, listen, it has to be this way. I'm saying this is why the market's reacting as it is.
Right. And while we're on the topic of a strong U.S. economy, last night you had Marcus Lemonis on, CEO of Camping World. I mean, this is a stock that I would think benefits from a strong economy, and he bought 25,000 shares of his own company. He actually sounded pretty disappointed he didn't get more.
Right, he wanted to buy more. I think that's important. Now, there's someone on Twitter saying, how about all the stock he sold higher? Absolutely. He did not expect the stock to go up that much. If you go over what he said when it came public, he never said, listen, I'm buying the stock. The stock went in the 40s. But what I would say is that he made the point, absolutely, he would like to buy more, and he will buy more if the stock comes down. More important, I think you're right about what he says about the American consumer. Now, he is taking a long-term view. I don't think Thor's doing that well. I think I say that because Thor did not that well last time, and I don't think anything's changed. But he should be viewed more as a retailer than a housing play. And right now, I think the stock's being viewed as a housing play. I think going against Lemonis long-term is a big mistake. He's a very thoughtful, smart man.
Yeah, absolutely. And then another interview you had last night with Joe Papa of Bausch Health.
Yeah, I mean, like Bausch,
Valiant.
he said that they're going to fix the balance sheet. He's done a lot to be able to move. And you know Joe. He's lengthened the debt maturities. He's really taken away the near-term pressure. He said that he was going to solve the lawsuits. The biggest lawsuit was Teva. That's done. And now he says he's going to introduce new products. He's introducing them furiously. They're winning.
So Teva one was Jipe Action, which they now have till 2028 on it.
That adds about $1.5 billion in EBITDA. I think that people should recognize that Joe Papa's doing the job.
Oh, absolutely.
And therefore the stock is right to be up, and it's a good buy on weakness.
Yeah, and 15% increase in R&D year over year.
What can look? Let's give it.
And organic growth, 2 quarters in a row for the first time. Since
look at General Mills. You see any organic growth there? Like 1%. I like to lump everything together because what happened? Look, we own J&J. We've been buying J&J.
Yep.
They've got terrific organic.
We'll talk about that one on the action
absolutely
alerts for sure.
Yep.
Yeah, and then so just jumping, you just did the mad dash on Nike. So I'm actually really happy you picked Nike because consumer discretionary talks to the strength of the U.S. economy. But what else are you seeing there that made you go with that one?
Well, I think it's Colin Kaepernick ad. This was surveyed by Canaccord, and you could say, well, listen, surveys are not necessarily accurate. But I think what does matter is, and Nike reports on the 25th, and the fact that the Canaccord survey shows that there's been a very positive reaction means that the conference call itself might be positive. They're saying, listen, we've gotten this feedback. And I think that really matters because a lot of people, I think, were thinking, okay, so Nike was doing well, but then they started that ad and it's really bad. And I don't feel that way.
Right, and I mean, internationally, I think it's really resonating with people.
Absolutely.
So, yeah. And
that's a very good point.
And then, in line also with Nike, you actually mentioned Walmart, which is actually getting Nike on the Jet.com platform.
Right.
Another kind of play. It's a staple technically, but sort of a bit of a read-through on the discretionary spending.
Right, but I would mention that while the largest, they've made it very clear that the majority of what they sell is from America, but that includes produce. They do a huge amount of import from China. And the question is, how much will they have to absorb?
Right.
And I think that one of the reasons why the tariffs have not hurt the consumer that much so far, and this 10% won't either, is that we have to make a point that retail is going to have to absorb some of these costs, and that's going to hurt Walmart.
And we have told members at Action Alerts Plus, actually, because we're invested in Nordstrom and Kohl's, and we've said, pretty much 100% U.S. revenue. The thing we're monitoring is sort of the supply chain, the impact of the supply chain.
That's very key, and that's that's kind of what I've been saying.
Yeah, absolutely. And Walmart, Jet.com, eCommerce. You actually mentioned FedEx, which is seeing really good stuff.
Down 10. I think look, a stock that's down 10 means there's more selling ahead, but maybe tomorrow's the day you pick some up.
Okay, so be patient on that one. Jim, anything else on the market? I thought Boeing was up despite
Boeing's up, I think, because of stimulus, and because it's only 10%, and they hit back with $60 billion, not more than that, but they don't have that much more to hit back. But I think we'll cover the rest in our call and fraction alerts for the club.
Yeah, absolutely. All right, that about wraps it up. Thank you.